Welcome back. You're watching Big Deal and we are discussing the scope of CBDC or the future of digital currency. Cyril Shroff, we have touched upon a few aspects on the mechanism and what it can potentially do, and you think that it will coexist with other forms of currency. I want to understand that if we really were to have a borderless currency across the world, which can help in cross-border transactions, faster, less expensive and remittances, can digital currency really take that place, and what are the regulations and international coordination that is required for that to happen?
So I think the short answer to your question is the answer is yes, but there are a lot of steps in between, sort of reaching from where we are today till then. For a borderless world where digital currency will work seamlessly, I think firstly each country will need to have their own version of a CBDC. The rules in relation to technology protocols will have to be worked out. Tax and the relevant foreign exchange laws of each country will have to be aligned for this. So I don't know what point of time in future it will happen, but if every country in the world or every currency in the world has this option, eventually this will get there, because this will result in the ability to make direct payments outside the banking system. And of course, that will carry its own risks as well. So necessary KYC and AML protocols will also have to be evolved. And a lot of it will depend on the design choices that have been made. So in the concept paper, RBI talks of three design choices. First, wholesale versus retail. I think they will do both. Then whether direct, hybrid or indirect, I think they've made a choice on going indirect. And a token-based or an account-based, it's likely that retail will be token-based and wholesale will be account-based. So all of this will finally influence the outcome, but there are it's a long journey with many regulatory and technological choices that have to be made in the journey. But in an ideal state, the answer to your question is yes.
All right. So Neeraj, as a banker, what do you think about the cross-border transactions and the remittances bit? And how can the digital currency really make that much smoother and less expensive? Do you think it's designed, the RBI's concept paper has been designed in that direction? And do you think that the international coordination is really taking place on that front? Or on the flip side, do you think that while it is only mirroring rupee, every country is just mirroring their own currency, and therefore the digital currency will also have the same forex hedging, the same remittance, blockages, and going through financial institutions and being, stopped by FEMA and various other regulations?
So to start off with a couple of points. Firstly, as far as the design choices are concerned, clearly easing off the international payments is one of the things that is there at the back of the mind as far as the concept paper is concerned. It can potentially be one of the major use cases for having a CBDC, besides potentially financial inclusion. In the context of CBDC, there are approximately 100-odd countries which are currently thinking about experimenting, wondering about how to go about it. And all of this is in some senses, being sort of, in some senses being mediated by BIS, which, as you know, is central bank. So there is some level of kind of thinking at each other and looking at each other and figuring out what other banks are doing that's happening across the central banks. There will need to be interoperability for us to have a smooth cross-border payment experience, but that is something that will evolve over a period of time. The one the one sort of defining feature is that we'll still have multiple currencies even in the CBDC framework. So which means that if you're going from India to, say, for example, Singapore, and you want to convert, you still will have to convert. There will need to be a need to make that foreign exchange transaction. But hopefully, in the context of CBDC, and given the fact these are electronic, instruments now, life will be a lot more easier, smoother, and less time-consuming.
As an international traveler, Neeraj, I can give you a feedback that, it's very difficult and an expensive proposition. And I was hoping that the new forms of currency will ease that. But if you are going to have different currencies, even in digital form, and the similar forex exchange issues, then we have to see how this really develops. But one aspect which, Neeraj, I know that you've been reading a lot on, is it really a half-hearted attempt by the central banks across the world to really fight back the rise of crypto? And I'll tell you that it's half-hearted. I say that because it's going to be regulated still. It will be less democratic, while crypto's really aimed for a real borderless digital currency.
In that sense, I don't think CBDCs are a complete replica of cryptocurrencies or a complete replacement of cryptocurrencies, right? Because cryptocurrencies by definition are supposed to have no intermediaries, a trustless sort of a system, a decentralized system. A CBDC would still be, it'll still be owned effectively, or it's a liability of a central bank, and therefore the trust issues at the center of CBDC. I think what the governments, including Reserve Bank of India and Government of India, are trying to do is that to provide a more sort of safer alternative to public, which is obviously wanting to now use digital currencies in one form or the other.
Yes.
CBDC, because it will have a central government backing, or it's a government-backed instrument, I think has that, has that ring of safety to it, which probably the cryptos do not have, right?
Right.
So that is a significant allure of CBDC, if I may use it.
Yes.
But clearly, it lacks the uniformity and the fact that there is complete decentralization, or at least there's a theoretical complete decentralization that exists in the crypto world.
All right. And Cyril Shroff, another ethos based on which digital currency has been really conceptualized is to, replicate the cash economy into digital economy. In fact, no interest rate and anonymity are some of those features which gives it a digital prototype of cash that you hold in your purse. Do you think it will solve that purpose? Because, cash economy, where we saw the whole demonetization also that we went through, was to really curtail the cash economy, which is used for tax avoidance and for fraudulent activities.
So will it be completely anonymous? I don't know, because one thing that one does know about technology is that there is always a digital footprint somewhere. But based on the technological choices that are made, I think a high degree of anonymity will be achieved, and I think hopefully technology will help solve that problem. On your second point about interest, I think is an important distinction to bear in mind, and both from a crypto comparison or even otherwise, is that not to think about this as an asset in which value goes up and down, but it is really just a digital equivalent of a fiat currency. Like 1 rupee in a cashless, in a paper form should be equal to 1 rupee in a digital form. That's the way to think.
Right, but I would say as a user, I think money in my bank account, then how I can transfer through various wallets, it's much more effective in getting the benefit of the interest that I get on my bank account, however small it may be, Neeraj would know, but it will still be beneficial in the long run rather than having CBDC if that were to happen for online transactions. My final question to you, Cyril Shroff, what is the missed opportunity here that we are looking at from the concept?
So I'm probably a little early to assess whether there are missed opportunities or not. And these are really kind of flip sides of the design choices that have been made. For example, not having it as interest bearing, one could ask the question as to whether that means that have you really missed out an opportunity to sort of have a lot of innovation in the banking system, because had there been interest on digital currency, there would have been a competition between bank deposits and that would have forced the banks to innovate or not. It's a question, it's a kind of a moot question to ask. I think there's a trade-off in terms of really, monetary policy transmission and bank deposits. These are really really counterpoints of each of the design choices that have been made.
Yes.
And will be made as we get to the next level of detail. For example, when the exact technology choices will be made, there will be a number of trade-offs, and there could be some missed opportunity there.
Right.
There as well. So I think a little premature to assess what are the missed opportunities.
Yes.
But in any innovation like this, there are always missed opportunities.
All right, so we are just in the beginning of the digital currency journey. But Neeraj, just one word answer. In your view, how soon would we get rolling on this? Because the technological, innovation also is required at the back end of the banks for the system to work.
I'm expecting over the next 6 months, we will have some kind of pilot rollout where the banks will get to experiment.
Yes.
In a limited way, in a closed loop way. And
Yes.
then depending upon how the pilot goes, the rollout could happen. Remember, China has been doing the pilot
Right.
for last 2 years now, right? So
All right.
it could be longer journey as well.
All right, but nonetheless, the journey has begun. The future of currency could be the digital currency. That's the view of the House. Thank you so much, Cyril Shroff and Neeraj Gambhir, for joining us on this interesting discussion on Big Deal. With that, thank you so much to all our viewers, and also happy Diwali to all our viewers and our panelists. It's going to be a festive season. Thoroughly enjoy yourself and keep watching CNBC TV 18. Thanks so much.
This festival, bring in Nissan Magnite.